What's going on, guys? Austin Zabak here with another YouTube video, and in today's video I'm going to be talking about why I prefer to invest in real estate over the stock market, especially in 2020 with all of the crazy things going on in the world right now. When you think of investing money, you probably think of the stock market. I mean, most people think of the stock market when they think of investing their money. But moving into 2020, the middle of 2020, you've seen everything in the world go down. Should you really be investing in the stock market? In 2007, 2/3 of investors invested in the stock market. Today, that number is down to 50%, and I believe that is because millennials are choosing to invest in real estate instead. And maybe you're watching this video and you invest in the stock market because you don't know anything about real estate. Well, I encourage you to stay to the end of the video, smash the like button if you haven't already, sit back and relax because you will understand not only how to invest in real estate, but why you should invest in real estate by the end of the video. Let me ask you a question. Are you interested in becoming a millionaire, financially independent, or having more money at the end of the month rather than more month at the end of the money? I'm certainly not somebody that can guarantee that. However, I will say, according to the billionaire Andrew Carnegie, he said that 90% of all millionaires become so through owning real estate. More money has been made in real estate than in all industrial investments combined. The wise young man or wage earner of today invests his money in real estate. Okay, so look, this isn't coming from me. I didn't just make this statistic up. No. A lot of people that made a lot of money did so through real estate. So what are the actual differences between the stock market and between real estate? I feel like there's not a lot of people talking about it. According to the U.S. Census Bureau, individual real estate investors account for 74.4% of all rental properties owned in the United States. On top of that, 91 out of the 100 top housing markets have seen a rental increase in the last year. That is income that you should be earning, okay? By the end of the video, I want to show you how you can make money through real estate investing, even if you have no idea what you're doing and you've never invested in real estate before. So to start everything out, I really just want to go over the cons of investing in the stock market. Now, as you know, there are pros and there are cons to everything, and in no way, shape, or form am I a financial advisor, so definitely consult with a financial advisor on your own time. But I want to talk about my personal cons that I see in investing in the stock market. One of the cons that I really see are a lot of the psychological factors, including emotional investing, meaning if something were to happen, right? A company were to tweet something, or a CEO were to make a tweet, or whatever the case is, I see a lot of people in the stock market that emotionally will either buy more stock or sell their stock, and they'll do it at the wrong time, and they'll end up losing money. And that is not a logical decision. It is an emotional decision many of the times. I'm also going to shake things up here a little bit, and I'm going to talk to you about liquidity as a con. And you're probably like, Austin, how in the world can liquidity of cash be a con? That is totally a pro. If I were to go invest in a mutual fund or something where I actually had to wait, maybe like a CD or whatever, to pull my money out, why would that be a con? And I'm going to tell you just why I believe that could very well be a con. The reason that I think sometimes in the stock market liquidity can be a con is because, again, it goes back to what I've been talking about, and that is emotional investing, right? Emotional buying, emotional selling. And the problem with that is you could pull your money out at the wrong time, and maybe your investment never reached its full potential. And you can do so with the click of a button. You could essentially liquidate your entire portfolio with a click of a button, typically in a matter of a very, very short period of time. And again, if something were to happen, something that happened in the market, something that happened however or wherever, you could liquidate that entire portfolio at the wrong time without really putting a ton of actual logical thought into that decision. One thing that I really love about real estate, and obviously we're going to talk about this in a minute, is that with real estate, you can't just sell within a matter of a day. Now, again, I could see how some people are like, Austin, that's a con. But for me, it is not a con because I know that over the course of time, the market will always correct. The market will always end up higher than it used to be 5 or 10 years ago because the market is proven to do that. So even if something were to happen and my real estate portfolio were to take a hit, assuming I'm not over leveraged, and again, we'll talk about this in just a minute, then I will be able to hold on to that real estate. People will always need somewhere to live, and I will be able to continue to cash flow until I'm ready to sell that property or until the market actually corrects itself and I can sell it at a profit, or at a very minimum, I can break even on my investment. Obviously, I've got to put a lot more thought into that, and those are decisions that I can't make in a matter of an hour. Another thing with the stock market that I really see being a con is that it can fluctuate very, very rapidly. And it makes a ton of sense, right? At the end of the day, the economy and the stock market essentially go hand in hand. All of your trending news, all of your big companies' tweets and Twitter and Instagram and CNN and CNBC and Fox News and everything goes hand in hand with the stock market. And typically, when somebody announces something or when something happens or the economy shifts or somebody makes some sort of anything, the economy or a company can essentially just it can change, right, in a matter of minutes. Now, again, I'm looking at this as a con. Obviously, in a very volatile market, there's always money to be made, and I totally understand that. But for the purpose of today's video, I'm going to look at that as a con, and I'm going to take it from the standpoint of, look, if you don't know what you're doing and you haven't done your research on a company or the market or what is happening globally, okay, on a massive, massive scale, then sometimes in the stock market, you can be a bit more blindsided because you just weren't paying attention or you didn't see it coming. Another con with the stock market is the amount of research and due diligence that it takes to truly invest in a company or a stock and really actually full-heartedly understand everything about the company, right? And their business model and what they do, and to really get a grasp on what it is that you're investing in. There are actually rumors that Warren Buffett reads 500 pages of financial statements every single day and essentially just makes decisions on what companies deserve more of his money and what companies deserve less of his money based on a number of different factors. But to me, that sounds fairly boring, okay? It does not sound extremely exciting from my point of view. Another thing that you have to do in the stock market is you've got to be able to predict personalities. You have to be able to predict people, and essentially you have to have a crystal ball, in my opinion, okay, to really get it right? To really know and to really be able to predict the future, you essentially have to be able to predict the future, okay? We'll take Elon Musk, for example, and Tesla. I know that about a month ago, Elon Musk tweeted a tweet on Twitter saying that his stock of Tesla was overvalued, it was overpriced, and within a matter of a very short period of time, the stock price fell by 10%, okay? So again, there's probably a lot more going on there. I know there was a lot of speculation of a potential hacking, and there was multiple other things that I know at that time people were definitely speculating on. But again, I will say that how could you have predicted that, right? How could you have predicted, and again, there's rumors of this happening all the time. You see this happening all the time. So for me personally, I look at the stock market as a very volatile investment. Another reason why I personally choose to invest in real estate over the stock market is that real estate is tangible, okay? I can touch it, I can smell it, I can feel it, I can hear it sometimes, okay? But in a nutshell, it is tangible, it is real. It is called real estate, right? And with the stock market, it is not necessarily tangible. I understand that, you own a stock of a company, okay? But that particular share of that particular stock is not necessarily tangible. Which leads me to another con of the stock market and why I choose to invest in real estate, and that is I have a lack of control investing in the stock market. I can't control if a marketing team decides to take a company from over there to over here and has an entirely different game plan than maybe they had when I initially bought the stock of the company, or if they choose to stop manufacturing a car and manufacture a different car, or whatever the case is. I really do have a lack of control of the decisions that are made in that actual company, which will directly impact or reflect in the actual price of the stock. And last but not least, one of the reasons that I choose to invest in real estate over the stock market, this being another con in the stock market, is it is not passive. And I understand before you drop into the comment section below and you smash the dislike button, because I definitely want you to smash the like button, you're probably going to be like, Austin, yeah, but you have mutual funds and you have ETFs and things of that nature. But okay, I'm just talking about the actual, like a regular old stock is not passive. And now, if we are talking about like an ETF or something of that sort, then I'll say that the percentage of which I'm going to make an ROI is typically a lot less than what I can make in real estate. And that is just looking at it, right? You look at Vanguard, I know they have a high yield stock, okay? I think it is VYM. and I believe the yield on that Vanguard stock is like 3.4 or 3.5%. Now, that is something that I can get a lot higher percent ROI in real estate, right? Typically in real estate, and again, depending on how good you are and depending on the things that we talk about in a minute, you can get a much higher ROI in real estate, and it'll be true passive income. Okay, let's just go ahead and dive in for just a minute on why I love investing in real estate, and I really hope that you take something away from what we're about to talk about, okay? So one of the biggest reasons I love real estate is because it is true passive income, which is obviously what we were just talking about the stock market not being. And again, you're like, Austin, well, wait a minute, you have ETFs and all these different things. And again, I'm just gonna say that there are a lot more benefits and a lot higher ROI with real estate than there is the stock market. And I'm happy to definitely hear your opinion on that, by the way. So drop into the comment section below. Let me know what you think about the passive income differences between the stock market and between real estate. Another reason that I love real estate is that it is actually pretty darn easy, okay? It is pretty darn simple and pretty darn easy. And you're like, Austin, but investing in the stock market is easy also. But you've got to choose a brokerage account. You got to figure out what brokerage account is right for you. You've got to figure out if you're going to day trade. You got to figure out if you're going to buy and hold, what kind of stocks you want. You've got to do all the research on the different companies or the different mutual funds or the different ETFs that are available, and whether it is a high yield or a low yield or a high risk or a low risk. There's a ton of stuff that goes into investing in the stock market. It's not just as simple as, clicking a button like a lot of people seem to think. Real estate, on the other hand, is actually very, very, very simple. Essentially, you look at a property, you look at surrounding properties in the neighborhood, and you say, okay, what are the comps? In other words, what are the comparable properties? And what are those properties selling for? Now, all comparable property means is that if I'm looking at a 3-bedroom, 2-bathroom, I'm gonna compare it to 3-bed, 2-bathrooms, right? I'm not gonna compare a 3-bed, 2-bathroom to a 5-bed, 4-bathroom, right? Because that is not a comparable property. Now, once I've determined the comparable properties, all I've got to do is see in the last, I would say 6 to 12 months, what are those comparable properties selling for in a similar or better condition. And that number, right, if you average those numbers out, will be the number in which my property or the subject property of which I wish to purchase will be priced at, right? It is what it is actually worth. And on top of that, it's just more laid back. I mean, I feel like people have this bad, kind of outlook on real estate. They're like, Austin, but my phone will ring in the middle of the night and, people will call me because their toilet is broken and I'm gonna have to go fix their toilet in the middle of the night and answer my phone while I'm sleeping or watching SpongeBob SquarePants or whatever it is that I'm doing. I'm gonna be honest with you, I don't have 1 million rental properties, okay? That is my goal, okay? Well, maybe not 1 million, but my goal is to definitely acquire more and more rental properties. I've also fixed and flipped real estate, and I've been in real estate for about 6 years now. But I will say that I've never actually had a tenant call me at midnight and tell me that I need to come fix their toilet, okay? I feel like that is like what we got taught growing up. And it was more of a scare tactic to maybe not get us to invest in real estate. And the more that I kind of learned about real estate, the more that I thought maybe that is, that was designed to prevent me from actually getting into the industry. The third reason that I love investing in real estate is that I have leverage. Now, what do I mean by I have leverage? It means that I have leverage on my money. And I'm gonna kind of break down exactly what I'm talking about. But in a nutshell, in the stock market, you typically have to buy a full share of a stock. Now, before you're like, Austin, Robinhood, I can go and I can buy a fractional share of a stock, okay? Look, for the purpose of today's video, we're gonna talk about buying a full share of a stock versus buying real estate. And you're gonna understand why, even if you could buy a fractional share of a stock, real estate is still better from the standpoint of what I'm talking about. And again, this is just my opinion, so take it for what it is worth. Okay, so with real estate, I can go purchase a property and put, let's just say, 20 or 25% down on a property because a bank will give me a loan on a property. Now, why that is important is because essentially what you have to understand is that I'm gonna go buy, let's say, a $400,000 house, right? Well, if I put $100,000 down on that property, being 25%, I own a $400,000 property, but how much did I pay for that property? I mean, I only paid $100,000 for that property, right? So in a nutshell, that is what I call leverage, because now what I can do is I can rent my $400,000 property out to a tenant that'll pay whatever they're gonna pay, whatever market rent is. Maybe it is a duplex or a triplex or a quadplex, which I highly recommend, because then you can kind of diversify a little bit. So if somebody essentially decides to abandon, one of the units and move out, you're not 100% vacant. But we'll save that to another video and just talk about the leverage part of it, right? Now, this tenant is paying down my mortgage. But again, I only paid $100,000, but I own a $400,000 property. That to me is leverage. Now, I cannot do that in the stock market. Your tenant also ends up covering your principal, your interest, your taxes, and your insurance, so you don't have to worry about that either. And now they're also paying down your mortgage. So in a nutshell, over a period of time, you're gonna end up with a $400,000 property that you paid $100,000 for, and now in 10 or 20 years, the $400,000 property is worth probably $500,000 or $600,000, depending on where you live. You've also gotten to depreciate that asset on your taxes and a number of different things as well that you kind of get with investing in real estate. You can also typically leverage that asset to go buy more assets. You can typically go to a bank and they will look at that income property as just that, right? As an actual asset, an income property. So now I can go actually to the bank and I can say, hey, Mr. or Mrs. Bank, I want to buy another property. And they'll look at that property and typically have a higher likelihood at getting another property because they will see that you have equity in that property, which equivalates to your total net worth. You also have a lot more leverage as it pertains to buying more assets and leveraging the asset that you already own as like a net worth play. You go to the bank and you say, look, I already have that asset, it's producing income, and they're likely to give you another asset. Right now, obviously, they're not just gonna give you $1 million. I think the limit is like 10, right? Depending on your overall leverage and depending on what your personal finances and your credit score and things like that actually look like. But it is leverage nonetheless. And the fourth reason that I love real estate over the stock market is I have a lot more control. And again, we talked about that a little while ago, but I just want to remind you that with real estate, I have control, right? I actually get to dictate, a lot of things about my property, right? And it isn't just like if somebody tweets a tweet or posts a picture on Instagram or Facebook or YouTube or whatever, that my overall net worth changes in a matter of a few minutes, right? With real estate, it's a lot longer drawn out of a process and big things actually have to happen. And it just ends up being a lot more complicated for my piece of real estate to just go to nothing. I mean, it essentially can't happen, right? It can't just go to zero, okay? Now, with real estate, it can definitely fluctuate and it will fluctuate, but it is never gonna go to zero and people will always have to have a place to live. Therefore, I have a lot more control of my net worth, my income, my passive income, and my overall just kind of finances in general. A really good example of this is there is no way that anybody could have predicted a couple of months ago that a random virus from wherever it came from would have just caused this massive pandemic and nobody would essentially travel, right? And all of the airline companies would plummet into basically nothing. I mean, nobody could have expected that, or that, people wouldn't be driving their cars as much because we would all have a curfew and there wouldn't be anywhere to go and nowhere to eat, and therefore the price of oil or the price per barrel would go below zero. So with real estate, I have a lot more control. If I own a triplex and I have 3 total tenants in there that don't know each other on any level, 9 times out of 10, okay, there's a really good possibility that not all 3 of my tenants are gonna lose their job at the same time. There's a really high likelihood that 1 or 2 of my tenants will still be able to pay rent. So even if I go from 100% occupied to maybe 66% occupied or 33%, there's a really high likelihood I'm still making money. I'm able to pay my mortgage, my interest, my insurance, and my taxes. And my last and final bonus to why I love investing in real estate are the tax benefits that you get with investing in real estate. Now, I'm not a tax person, okay? I'm not gonna try and sit here and, give it all to you, but do your own research. There are literally a ton of tax benefits of investing in real estate. I know because I've done it, okay? I have experience actually doing what I'm talking about. So I encourage you to do your own research. I really appreciate you watching today's video. I kind of made this on the fly, so if you enjoy the video, I would love to make more videos just like this one. Just drop into the comment section below. Let me know what you would like to see in a future video. I'd love to make it. If you haven't already, I'd really appreciate it if you would smash the like button, and I'll look forward to seeing you in the next video.